Okay, so the media did its very best to lure Fed Chair Powell during that press conference into revealing what the Fed might be leaning toward doing at its next interest rate setting meeting, December 13th. Did he bite?
I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Don't ask about December. Bob Dahl is the CIO of Crossmark Global. He joins us live now. Bob, I mean, what did you glean from that? What do you think happens in December?
Yeah, probably nothing. There's still some case to be made, and that case stems from the fact that we're a long way away from 2% inflation, Liz. That their job's not done. What we have to ascertain, everybody does, is how about 0 to 5.25 in 18 months? Are the effects of that already behind us? So I think what they've already done and its effects are more important than does the Fed go again in December or January or February. They've done a lot to slow this economy, and it's slowing some, but it's got more to go.
Okay. That said, where do you see the consumer, and are there consumer names that you feel can hold up in perhaps a slowing economy? Although right now we don't quite see that. We got the JOLTS number, job openings and labor turnover, higher than expected at 9.55 million open jobs. Again, the ISM for October, that's the Institute for Supply Management Manufacturing Index, was definitely lower than expected, which is disinflationary, except that the prices paid index actually was up more than expected, 45.1, and way more than September, 43.8. That's how much people pay for these prices. So inflation's still here.
I agree that's a problem. You couple that with the University of Michigan inflation expectations from yesterday, where the one-year number moved from 3.8 to 4.2. Americans are not lying down saying we've conquered inflation. The Fed, therefore, I think, has to hope, pray, and maybe do some more down the line. Look, the consumer, we just got the third quarter GDP numbers. We're off the charts. That is unlikely to continue at that level. And, of course, the consumer stocks in the 10% decline from late July to last week, the consumer stocks got hit pretty hard.
I'm looking at Lowe's, Adobe Systems, Elevance Health. Those are your choices here. And then you talk about Lowe's, the online or big box retailers. You could spread that out to everybody from Walmart to Home Depot. Why Lowe's?
So I want to take advantage of the sell-off. This stock has been weak since July 31st when the market peaked. They're the number 2 player, as you know, in do-it-yourself retail. They're having a flat year in terms of earnings with a lot of hope and reasonable prospects for better earnings next year. The stock's, a high single-digit grower over the long haul and is selling at a 20 to 25% P discount to the market. So in the consumer space, I'm happy to play Lowe's, Liz.
Okay. It's good to have that shared with our viewers, Bob. Always a pleasure to see you. Thank you so much.
Thank you.